Yeah, thanks, Tim. Appreciate everyone attending. And if we just scroll to the next slide. As Tim mentioned, we have a proprietary technology, which is an airway and now a positive end expiratory pressure or PEEP valve in an oral appliance. And in doing that, normally a mouth guard would only be able to treat about 50% of sleep apneic patients. We've increased that to 80%, which is a significant improvement on existing technologies. If we look at the patients in the US alone that have been diagnosed that are outside of care, that's a $2.4 billion opportunity in device sales alone. We also have other revenue streams. We've developed a unique clinical business model to deliver the technology. It's a hybrid technology that sits between a mouth guard and the CPAP, which is the face mask and pressure machine. What we've done is we've brought sleep physicians and dentists together to share patient care and also sharing the revenue streams that arise from that. At the end of August, using that model, we'd contracted 57 sites and we'd launched to 27. And there are various stages of opening and reopening. We certainly had some closures due to COVID, but we've rebounded well beyond where we were pre-COVID now, and we're on a very steep trajectory in terms of revenue growth. Those 27 sites would represent $6.2 million annualised revenue at the minimum contract quotas. We have quotas in our contracts, and we're working with those groups now to get back towards those quotas. And as a response to COVID-19, we've also introduced a telehealth solution, which really has opened up the funnel to patients in care as people were sheltering at home, and now as telehealth has increased logarithmically around the world, especially in North America, we're certainly are riding that wave in terms of our integration into the sleep facilities and sleep labs and bringing patients into care at an increasing rate. Next slide, please. So obstructive sleep apnea is when your airway collapses multiple times when you're asleep. It can collapse at the nose, the soft palate, which is the boxing bag at the back of the throat, the tongue base, the side walls of the epiglottis. It's a multi-level problem. People snore from all different reasons and they stop breathing. Those patients tend to stop breathing regularly as well. Huge comorbidities, diabetes, hypertension, heart disease, stroke, some neuropathies. Workplace health and safety issues as well as productivity issues. So it's a massive problem. In Australia alone, it was $23 billion a year of lost productivity and ongoing healthcare costs. And Australia is 2% of the world market, so it's a multi-trillion-dollar problem globally. The next slide, please. The standard of care is CPAP, you can see there on the slide, which involves a mask strapped to your face with an air pump pushing air into your mouth and your nose. It's got about a 50 to 60% quit rate within the first year. If you have 100 patients diagnosed with sleep apnea, 35 of them will refuse CPAP treatment outright, 65 will try therapy with a CPAP, 50 of them will take the technology home, and then half of them abandon it within a year. So there's a huge group of patients, around about 3 million that are outside of care at the moment. And there's 35 million sleep apneic patients just in the US alone. So it's 35% of adult males and 17% of adult females. Massive problem across the globe. Next slide, please. Our technology, normally a mouth guard would bring the jaw forward to stop the tongue from flopping back and falling into the airway. The problem with that is you can still have a nose and a soft palate collapse, a type snore, and also the side walls can collapse in as well. By putting what we call a second nose into the airway, we allow the air to flow below those obstructions around the tongue and straight into the back of the throat. So we've seen now on multiple clinical studies across thousands of sleep epochs that when the patient would normally obstruct with this technology, the patient continues to ventilate through our integrated airway. And we're seeing dramatic improvements in efficacy as a result of that. It's basically a CPAP in your pocket now. We don't need the machine, we don't need the mask, and we can breathe with tongue stabilisation and with the airway for over 80% of patients. Incidentally, nasal congestion or a blocked nose affects about 82% of sleep apneics any given night, and night on night it's up to 100%. So this multi-level collapse is the main reason for the non-response of a normal oral appliance, and it's the main reason people abandon CPAP. So the second nose is the first real innovation in decades in this field. Next slide, please. As I said, it's a major problem. 3 million patients have been diagnosed that are outside of care at $800 a unit, which is our sale price of the unit. We also have a recurring revenue in consumables and service fees over and above that. But just the units alone, the device alone, that's a $2.4 billion opportunity for Oventus. And of course, only 1 in 5 patients have been diagnosed. So there's 5 times more than that as a potential market. And as this becomes recognised as one of the most, if not the most effective treatments on market, we expect to see that increase dramatically as well. Next slide, please. As I said, we have the second nose, so we're bypassing nasal obstruction, soft palate, collapse. We're reducing lateral wall collapse as well. We've shown that allowing the air to flow through that integrated airway has the same effect in terms of stabilising airway as pumping it in with a pump and a mask. We're stabilising the tongue base, we're reducing overall collapsibility. So we're seeing that some really significant improvements in efficacy. And, when we talk to sleep physicians about it and respiratory physicians, they instantly recognise the difference in the technology and the benefits it can provide to their patients. And that's been one of the reasons why we've developed a lab-in-lab program, because it's the sleep physicians who really understand the physiology and are likely to prescribe this technology and embrace it. And we've now facilitated the collaboration between them and dentists to deliver this to their patients, no matter where those patients may be, whether they're in the sleep clinic, in the sleep lab, consulting with a sleep physician, or looking at a CPAP trial. We've provided the sleep physician the ability to deliver this technology exactly the same way any other technology utilising the lab-in-lab program. Next slide, please. So you can see that a standard mouth guard, 50 to 60% of the time, we get a success. We get 60 to 70% success with the airway. And then we have this positive end expiratory pressure valve. So we have the benefit with the airway of bypassing multiple levels of obstruction as we breathe in. You can see that valve down the bottom right folds in on itself. When you breathe out, you breathe against those little holes, and that resistance leads to the pressure gradient building up in the airway. So the main reason why oral appliance fails, or the main anatomic reason, is a blocked nose, multiple level obstruction, and the switch to mouth breathing. What the airway and the valve does is it takes the problem and it turns it into the therapy itself. So the reason why treatment would normally fail now becomes the CPAP. It regulates the patient's own breathing and diverts some of that air back into the oropharynx or the airway to stabilise it. And we're seeing success rates above 80% now compared to 56%, for a standard mouth guard. And in fact, we have some trial data coming through now that looks like it's going to improve on that again. When we show this PEEP valve, PEEP is what a CPAP is designed to deliver. So the fact that we can deliver it now in a mouth guard, without a machine, without a hose, without a mask, is a huge advantage to patients in terms of their compliance. And we now have very similar efficacy as CPAP with the compliance of a mouth guard. So the mean disease alleviation, or the overall effect on disease, is first in class. It's the best results we can see in the market. I think over time, this technology will become a first choice of treatment. And in fact, in recent times, particularly as a result of COVID, we've seen many sleep physicians prescribing this in place of CPAP, particularly with the risk that CPAP poses to the spread of COVID. Next slide, please. So if you look at a standard mouth guard, we talk to a sleep doc and we say, look, why don't you use mouth guards more often? And the first thing they say is variable efficacy is a problem. We don't know if it's going to work or not. Once we show them the technology and the data, we've increased success rates from 56 to over 80%, efficacy from 50% to over 70%. And they'll say, look, why wouldn't we start with this therapy as a first pass treatment? And we agree completely with that, obviously. The next problem then becomes, well, it's a complex patient journey. They say, well, if I refer them to the dentist, I know I'm not going to see them again. They'll charge them a lot of money and I'll lose them to follow up. And the charging a lot of money leads to a competing economic imperative. So we have a turf war between dentists and sleep physicians that's been going on. And in fact, 2 years ago, the professional bodies for dental sleep medicine and sleep medicine officially separated. So we have a real siloing of professions. So we had to overcome this variable efficacy, which we've done with the technology, but then the complex patient journey, bouncing between referral sources and patients being lost to follow-up, and then, of course, the competing economic imperatives. In response to that, we developed a lab-in-lab program. So I can go to the next slide, please. You can see here that instead of the patient being referred out to a dentist, because we're a digital workflow company, if you look at that middle picture down the bottom left-hand side, you'll see a little wand scanner there on the desk, and that's all we need. That is our dental clinic. That wand gets waved around inside the mouth. We take images inside the mouth. We build a 3D digital image of the mouth. We then design the O2Vent Optima in Brisbane. It gets printed in the market where we're delivering it, in Sydney for Australasia and in Oregon for North America, and that gets delivered back to the sleep clinic. So the patient gets treated at the point of care. They can be scanned in a sleep clinic, in a sleep lab, or even a CPAP reseller, and the device can be delivered in-house now. So there's no referral across the street or down the road. We don't lose patients to follow up. And in doing so, we've also developed a model where the sleep physician and the dentist or any other stakeholders can legally share in the revenue streams from that, bearing in mind that there are 25 different sets of regulations across 50 states that work against this collaborative model. So it took us a long time to figure out how to operate in North America to really and truly share the care of the patient between the sleep physician and the dentist. We've now done that. And, you know, we only had Optima launched in September last year. We had our first contracts for the lab-in-lab program signed before FDA approval in September. And since then, we've signed 57 sites and launched 27. And that includes trading through COVID. So I'll get into those numbers a bit more shortly. Next slide, please. Also, I think it's important to remember that there's an existing HCPC code or CPT code for this. It's EO486. It's reimbursed on average around about $2,000 in the US market, slightly less in Canada and Australia. So we also have it approved for Medicare in the US to cover it. We can bill the government directly for those patients who are Medicare patients, which is 20 to 30% of the US population. So as I said, we got FDA clearance in September. We had material contracts with minimum quotas of 20 devices a month, which represents around about $13.6 million on the sites that we've contracted. We've now actually launched 27 of those sites, which represents about $6.5 million worth of revenue annualized. We have 11 more in implementation, and we're continuing to negotiate contracts. We implemented a telehealth program, so we can now deliver at least half of our interactions with patients are online via telehealth. In doing that, we increased our conversion rates to treatment from 50% up to about 80%. As I said, we launched the O2Vent Optima after FDA clearance. While COVID was putting in place shelter-in-place orders, we actually developed some new workflows which are more efficient. We've come out of COVID now well ahead of where we were. We have a strong balance sheet after a capital raising during COVID or shortly after COVID broke, and we're really well positioned now to continue to ramp sales through to the back end of calendar 2020 and well into calendar 21, with a huge funnel of launches in the implementation calendar and more contracts being negotiated on an ongoing basis. The deal funnel at the moment is sitting at around about $75 million annualized at minimum quotas on the contracts we're negotiating, which I said is well up on where we were even just a few months ago, pre-COVID. Next slide, please. So there's our deal funnel, 57 sites contracted, 27 launched. Due to COVID, at the end of August, we only had 12 sites actively scanning patients due to shutdowns. We've added more sites to the launch and opened up more sites since then. But we have a deal pipeline and an implementation calendar that is well and truly full. And we expect to see on the back of that us starting to see some really good revenue growth month on month, quarter on quarter, which we've already seen. We expect that trend to continue and accelerate through calendar 21. As I said, the contracted sites worth over $13 million and launch sites. Now we've launched some more. We're probably approaching closer to $7 million annualized, which is it goes a long way towards our break-even point, albeit at the moment our capacity isn't being utilised fully as we start to trade out of COVID and patient flow returns. Next slide, please. So you can see, we had some increasing revenue pre-COVID. In the March quarter, we were shut down in most sites through the June quarter. In the September quarter, July and August, we were well ahead of our pre-COVID revenue ramp. September has continued to grow on the same trend line as June, July and August. And, we're looking at some significant growth in the September quarter, and we expect that to continue month on month and quarter on quarter for the foreseeable future. On the back of our deal funnel, the implementation calendar, and patients returning to these sites. So we're achieving this growth even in the face of half of our sites being closed to patient directly. We've switched to telehealth, and we've also piloted and launched a home care program as well. And within these sites, patient flow generally has been reduced by 50%, but our conversion rates have increased. So irrespective of the challenges thrown at us by COVID, we've got a very flexible and nimble business model. We've got a great team, and we've managed to trade through and have some very significant growth in device sales and revenue as we traded out of the June quarter. Next slide, please. You can see there our device sales are building. We only got FDA clearance in September. We launched lab-in-lab in October. We generated first revenue from that in December. We were going through February, looking pretty good in March, but it was truncated. We had very limited access to sites in April and May. We started to open up again in June, and we've accelerated nicely out of COVID. We're pretty much where in September where we had hoped to be on a straight line if we hadn't have had COVID occur. So we've bounced back really strongly. Growth is on the same trend as what we saw in June, July and August. Patient flow is improving, conversion rates are high. We've got good support from payers in the US with existing reimbursement codes. We have a funnel of contracts that have been negotiated, signed and launched with a full implementation calendar. So we're expecting solid growth month on month and quarter on quarter. Next slide, please. As you can see here, out of 27 sites launched, only 12 were actively scanning. There were about 14 where we were engaged in telehealth, and we do that to continue to engage with the patients, and we book their scan appointments, which is where we take the records to build the device and deliver it to them. That's the point of booking revenue. And we're doing that to build patient flow for when those sites open back up. And that was successful. You could see the rebound post-COVID, and we're adding more sites at around about 3 to 4 sites a month, opening or reopening. Patient flow is increasing. We're at about 50% capacity across the sites that are open at the moment. They are continuing to build, and we're adding more sites to that. So this combination of telehealth, home care, the lab-in-lab program has enabled us to trade out of COVID quickly, regain lost ground, and we have a very good outlook for the rest of this calendar year and for the foreseeable future. Next slide, please. So our primary objective at the moment is to relaunch and launch additional lab-in-lab sites. We'll expand our telehealth and home care program. That's a really exciting extension of the lab-in-lab program. We're looking to maximise device sales from these sites. We want to reduce lead times to revenue. We've reduced that lead time by half as we traded through COVID, and that's staying at that rate at the moment. We have scalable capacity. We're an outsourced manufacturer. We have no fixed costs in the clinical business. We have no fixed manufacturing costs, but we do have design costs and administrative costs. So we're a low fixed cost company, very flexible in our cost base. We're building revenue quickly. We have an enormous potential funnel of deal flow, and we have a very full calendar to keep rolling out sites at very low capex. It's around about $35,000 per site to get these sites operational, and at minimum quotas, as I said, across those first 27 sites, it's about $6.5 million. We're controlling costs as we rebuild revenue, as we want to increase cash flow from operations, and we're targeting a reduction in cost of goods sold from 40% down to 20%. There's some projects underway. We look to achieve that over the next 2 quarters. We have the XVent valve, which we're looking to lodge a 510K FDA application very shortly, and that's should be in market next year, ideally the middle of the year next year. And we're also launching a lab-in-lab program in other markets with strategic partners, so that's underway as well. So lots going on, but very focused. The team is focused on maximising revenue and increasing free cash flow to get past that break-even point as soon as possible. We have a great board, Australian and US directors, Mel Bridges and Sue McLean, I'm sure many of you know, Paul Malloy and Jake Nunn, Sharad Jossi, very experienced US directors, bring an enormous amount on the table in terms of understanding of the US market and contacts with US investors, as well as people that can help us expand into other areas. And at some point, we'll need to launch the other applications of this technology, of which there are 7 or 8 different multi-billion-dollar opportunities. So the technology is great. We've got a great team. We're launching, we've figured out the commercial pathway, and we're building revenue very quickly. Even after we've had to obviously go through a bit of a slowdown through COVID. Next slide, please. We raised some capital during or just after COVID had broken. We have a very strong balance sheet, 5 quarters of runway without revenue. We're building revenue. I'm still a significant shareholder, as are the other founders, and the top 20 shareholders holding about 30% with 44% retail. Revenue, just over 400,000 last year. We were heading for probably a bit more than that until COVID hit, but I think you'll see some very significant revenue growth as we go through financial year 21 and on. And obviously plenty of runway there and great support from shareholders and the board. Our institutional shareholders, many of them have been there from pre-IPO and have participated in every round and have been very supportive on the way through. So we're very grateful for that support as well. Next slide, please. Our patients obviously are first and foremost. If we look after them, the business looks after themselves, and we've had absolute rave reviews on the technology. We get great feedback. It's life-changing technology, and that's really what drives the demand. Once the sleep physicians see the technology and see the results with their patients, then we see organic growth in each of these sites that we've launched, and then peer referral as well. Introducing the technology to their peers has been one of our main avenues of growth. We have a very small marketing team, only a handful of people in sales and marketing. The technology speaks for itself, and really it's about implementation, rolling out these clinics and optimising revenue from each site, and then reducing our cost base to ensure great profit margins. So any questions?
Thanks, Chris. I've got to say we're out of time, but I'll throw a couple of questions at you anyway, and then I'd like to follow up if you don't mind. What's your experience in the sleep labs in regards to kind of people who fell out of treatment? Is this a product that's being recommended?
Yeah, so if there's a patient that's failing CPAP, then this is a great alternative for them. In the US market, a DME distributor who ordinarily trials CPAP has 90 days to show compliance. If they don't show compliance at 90 days, they don't get paid. And so our conversations with them is that, look, if you've got a patient that's not trending and we train them how to identify those patients, you can scan them and get paid tomorrow. Two benefits from that: they get revenue, but also the patient's going to be in care. So that's a huge driver for those patients that are failing CPAP. But what we've seen in the US market in particular is that when the sleep physicians review the technology and the data, they're very comfortable to prescribe it as a first line of therapy for many patients. And that's something that's been a huge benefit through COVID, because CPAP trials have not been conducted in the same way. They've been drop shipping of auto PAPs, and there's been not as much follow-up there's normally been. So all of our sales through COVID have actually, mostly of them have been first pass sales.
And what's the margin on the product?
So at the moment, we're at about a 60% gross profit margin on the device. We also have consumables in the connector bands and the valves, which we get about an 80% gross margin on. The device is reimbursed every 3 years. We charge around about $200 a year on a subscription model for the connector bands and the expand valve, and the device is reimbursed every 3 years. So good margins and good resale potential as well.